Hello, Let's Win family. I'll be coming to you and giving you 10 end of year financial and tax planning things that you should be doing as we close out the year in itself. So we're going to get right into it here as you prepare and get ready. Okay, so as we look at this here, we make this just a little bit, maximize this here, make this a little bit bigger. 10 end of year tax and financial planning moves. The first one here, contribute to your retirement plan. So most oftentimes, most people contribute only up to their company match. So you should be finding out what that is and know what that is. And also, too, I want you to find out, if you don't know this here, whether your money is going towards the Roth or the traditional. Now, if you have money in a Roth that's going towards your 401k, that money now is going tax-free. That does not give you a tax deduction for the year, but the money that you put into your Roth 401k, that money is growing tax-free. So when you turn 59 and a half, all the money that you're contributing and all the interest that you're earning on the money in the Roth 401k, after 59 and a half, you're going to be able to withdraw that money tax-free. Now, if your money is going to a traditional 401k, that's going to lower your taxable income for the year. But when you turn 59 and a half, you're going to have to pay taxes on that money. So it just depends here. Most people are contributing to the traditional 401k, but I want you to know the difference here. We can go on our one-on-ones and discuss this more. Ideally, to find out, should you be contributing towards the Roth 401k or the traditional 401k? It just depends on your situation. If you're in a high income tax bracket, contributing more towards your traditional 401k will help you lower your taxable income for the year when you file your tax return. The most that you can contribute towards a 401k into 2023 is $22,500 if you're under the age of 50, and you can do additional $6,500 if you're over the age of 50 as well. But most people contribute up to their company match. The second one here is money in your Roth IRA account. This is an account that you can have outside of your job retirement plan. The investments, like when we talk about Apple, when we talk about Tesla, when we talk about NVIDIA, all these companies, Microsoft, these are companies that you can invest inside of your Roth IRA. It's a little bit different than your 401k because now you can invest in individual stocks, whereas in your 401k plans, you can only have like index funds is generally what they're investing in. All right. So for your 2023 contributions, you can contribute up to your 2023 contributions until the tax year of April the 15th of 2024. So if it's February 1st, 2024, you can still make contributions towards 2023 all the way up until April the 15th of 2024. The maximum amount that you can put into your Roth IRA for 2023 is $6,500 if you're under the age of 50. If you're over the age of 50, you can do additional $1,000 for a catch-up for a total of $7,500. Now, you can contribute whatever dollar amount up to $6,500. So if you only contribute $100 towards your Roth IRA, that's better than nothing. So highly encourage you, just don't do nothing, do something. But it's always highly encouraged to put as much as you can towards your Roth IRA. So consider end of year tax planning here, looking at your Roth IRA, see how much you contribute. Let's get together and let's get on a plan here to grow your money tax-free. The third step here, flexible spending account. So funds are most often use it or lose it. So your FSA funds, you have to use it or lose it by the end of the year. This is for your medical expenses, prescriptions, copays, eye and dental. So anything medical related here. So look at your FSA funds, make sure that you have a plan to use it, or if not, you will lose it by the end of the year. The fourth one here, use all your dependent care FSA funds. So you have a flexible spending account as well. So if you have kids where they're in child care, preschool, before and after school care, you can use up to $5,000 when you do your open enrollment if your job offers this, a flexible spending dependent care. So you can't mix this up. This right here is the medical, FSA medical funds. There's also one called an FSA dependent care. So you can also, this helps you lower your tax burden as well. So you also have to use this by the end of the year as well. So make sure that if you're in an FSA dependent care that you use all your funds. The fifth one here, look at if you got kids here, if you're saving for college, a 529 college savings plan. For people that pay state taxes, You get a state tax benefit for this. States encourage you to contribute towards a 529 college savings plan. So some of your contributions help you lower your taxable income. We can look at it based on your state, where you're at. I'm in Florida. We don't get a state tax deduction, but like someone, let's say, for instance, in Maryland, they get a state tax deduction for contributions that they make towards their child 529 college savings plan. Money in a 529 college savings plans, as you contribute towards this here, it helps you lower your taxable income for the contributions. But the money in here grows tax-free for all college-related expenses: tuition, books, fees, off-campus housing, computers. So as you contribute money for it towards this here, and it's invested, it's going tax-free. So all this money here, as it's growing tax-free, you can use it for qualified college tuition. You can use this here. Any dollar amount is free to open up. Let's get together. If you got a child, you don't have a 529 college savings plan, you can also have what we call a prepaid plan. It all just depends. So consider looking at your 529 college savings plan and see how that's going. All right. Number 6 here, look through your paycheck and make sure that you have enough withheld for your taxes. I run a lot into this here when we're looking at tax planning. I also do taxes as well. And you will feel it on your tax return. Uncle Sam will let you know if you're withholding enough for your taxes. So you need to look at your paycheck, because if you're not taking enough in your taxes, then you're going to owe when it comes to your taxes, when you fill out your tax return. Number 7 here, donate to cash to charity, whether it's through tithing, whether it's through nonprofit organizations. This helps lower your taxable income. Number 8, review your health savings account. Now, this is a little bit different than a flexible spending account, because this also goes towards your medical expenses. But the difference between the HSA, which is a health savings account, and a flexible spending account, with a flexible spending account, you have to use it or lose it by the end of the year. But with a health savings account, your money rolls over year after year after year for funds that's not used. Now, the funds that's not used, you can also invest it as well. This right here is a wealth gem in itself. So as you're saving for your healthcare expenses, this money here can be invested. And then after age 65, any unused money, right, can be used for a general purpose, because at the age of 65, you get on Medicare. So you can grow this account here, man, $50,000, $100,000, $200,000, $300,000, $500,000. The younger that you are, that you start this here, that you're saving money for your medical expenses, and you can be using it, investing it, and growing over time. Also, contributions towards your health savings account lower your taxable income for the year. So if you don't have a health savings account, you're in open enrollment, you don't have any major health issues, let's look at a health savings account, as it's a wealth gem in itself to have. Number 9 here, for my business owners, you can pay your quarterly taxes, which is preferable, right? So you can go here and make your 3rd quarter tax payments, your 4th quarter tax payments. So instead of paying it all at the end of the year, it's always recommended to pay your quarterly taxes on earnings that you make in your business. All right. And you can pay this on via the IRS website. So you can get with me. We can coordinate that where you can start paying your quarterly taxes. And number 10, plan for your holiday budget. So Thanksgiving is coming up. And so when we look at this right here, let's start planning for that, for our meals, for any travels that we're making. And after we eat our meals, a lot of people are going to be doing some Black Friday shopping in itself. And so after Black Friday shopping, that's going to also lead into our Christmas shopping as well. So let's make a plan for our holiday budget, because if not, our money is going to tell us where to go. So let's just try to avoid going into debt if we can, by getting ahead and planning for the holidays in itself. So this is 10 ways here where you can do some end of year tax and financial planning in itself. I continue to look forward to exciting things in the year 2024 for all the members here in the Let's Win financial community. You guys be blessed as always. Let's continue to win.